Bozidar, thank you so much for taking the time to join me today. I've been really looking forward to this conversation because your background is quite unique, from physics to Wall Street to building your own advisory firm. So I'm excited to dive into your story and how you think about money, markets, and life. For people who are hearing about Honeybadger Advisors for the first time, I really want you to start off by telling us what does your company actually do and who do you typically help and why do you feel you're different from all the rest?
So, thank you, Sharos, for having me. It's a pleasure to share some of my thoughts. So, Honeybadger Advisors is in advisory business the same as the honey badger in reality. In the wild, you know that it's one of those animals that doesn't back down. If you ever seen any videos of it, you'll know that pride of lions, venomous snakes, bees, everything, nothing stops it. And that's a subliminal message.
Mhm.
The idea of Honey Badger Advisors is to pull the curtain aside and show you pretty much everything that the banks, funds, and insurance companies don't want you to know. And things like, backdoor sharing of fees, forcing of some certain shelf space fees, things that are not disclosed, proprietary products, and the sell, sell, sell culture regardless of what people need. Many times you can hear people saying they're fiduciaries, but if you work for a big bank or any one of those wirehouses, you cannot be a fiduciary because the payment structure is such that it forces you to be the salesperson. Sales of whatever it is, the product du jour is the name of the game. And so a lot of people get swayed by those nice wood paneled conference rooms and beautiful finger food. It's great. You should enjoy it because you pay for it.
Of course. Okay. So, what made you decide to start your own firm? I mean, having spent yourself, you spent time in Wall Street, and it's a very long span of career that you've had in Wall Street. And what problem were you trying to solve when you created Honey Badger Advisors?
Well, that's the I am going to go through this in more details. After all these years in hedge funds and long only funds, and finally being chief portfolio strategist of a private bank, I saw how things are being done. I saw what people are being pushed into, and I thought that it's time for somebody to do something different and make sure that really the advice is in the best interest of the clients, which means you cannot have ties with banks, with funds. You cannot be having sales, pressures. You have to be somebody who provides the best possible advice into the best possible interest for the clients. That was the idea. I've seen what things have been done to people, and I think I can do this can be done far better. Hence, Honey Badger.
Let's dive in a little bit on that point. You talk about value-based planning. Could you explain, in words, what does that actually mean in practice?
It is extremely important that the advisor shares the values of the clients so that clients' desires and for the future, it's not just monetary. It's also what exactly is the money for you. For people, it's different things. Does it only provide you in comfort in life? Do you want to help your community? How do you want to help your community? Do you want to establish a legacy? How do you want to establish a legacy? And you can't do that if if you're being provided cookie cutter advice from a large corporation that really has its own agenda. One of the things that we do is we are adamantly opposed to ESG, which is being pushed on the population by the likes of BlackRock, without us actually having any vote. So the
Mm.
idea of the fact that when you buy mutual funds, the fund actually votes your shares for whatever they want is a wrong one. And that's how many of these policies get enacted because these funds are using our money to enact an activist agenda, and that's wrong.
I read that you focus on building a defensive perimeter before investing. Could you explain what that means?
So there are multiple legs in planning. A
Hmm.
lot of people approach this saying, okay, well, I just pick a few stocks and that's it.
Hmm.
That's not exactly how it's done.
Hmm.
There are many legs on which someone's financial future stands. And planning for the future for how you want to spend that money at some point, where do you want it to go, is essential. That means you have to have some defensive positions, you have to mitigate your risk, and you have to invest intelligently. I've been in institutional investing for a very long time, for 2 decades or more before I started my own. So I bring that experience to my clients. And what it means is that I'm looking to reduce the volatility cone, building intelligent portfolios that are focused on reducing the downside when the market turns south. And that is the goal, which means, you know, let's say you start investing tomorrow and the market is down 20%. Well, if you're down 20%, it's going to take a 25% move up for you to break even. But if the market's out 20% and you're down 10 or 5, uh, that means by the time everybody else breaks even, you're way ahead. So in essence, there's obviously more to it, but in essence, that's how I construct portfolio. I want my clients to sleep well at night, knowing that, okay, a war breaks out or something like that happens, their portfolios are looked after, and they are well positioned to handle whatever comes their way.
Okay, understood. Understood. Would you provide any example, like for if anybody is watching this episode and they want to see how can that be in practical terms? Um, if you could run us an example, that would be really great. I mean,
Example of what I put together.
yes, as a defensive perimeter, and how exactly can they safeguard it
Well,
themselves against?
well, so there are a couple of things that people, depending always on the level of wealth.
Hmm.
When we are just starting, there are things that we can handle, there are things we cannot handle.
Yeah.
So insurance is part of that picture, because uh, usually if you're not independently wealthy, you need to defend your income. Your ability to earn income is one of the biggest assets everybody has. So this is where, for example, life insurance comes in. When people have, dependents, that's one part. The other part is also great. We just achieved this great pile of money, the nest egg. Now you want to spend it. Well, okay. The IRS is going to come your way and say, well, we want our cut.
Yeah.
How do you handle that? How do you handle transfer of that to the next generation? That also needs to be planned well in advance, because, as they say, rich men north of Richmond have no problem putting their hands into our pockets. So that needs to be planned and mitigated with different strategies. So it's not just the growth. On growth side, on the investment side, that's the thing. Making sure the portfolio is well protected on the downside. And then on the other side, you have other components that make sure that you're prepared for inevitable taxation, transfer of wealth, and so on.
I want to, I want to touch a little bit about your background and
Uh-huh.
your professional experience so far as well. You actually started off with in physics, not finance. How
Yeah.
did that transition happen? And do you think thinking like a physicist gives you a different perspective on markets and risk?
Well, yes, I think so. And I'm hardly the only one, right?
Hmm.
There were plenty of people in the 90s who would kind of parlay their skills in modeling into finance. Uh, so that's quite simple. When you are trained as a physicist, you train to look into the problems and kind of discern, this is important, this is not important, and try to create a model that works most of the time. And so that's what I was doing for a long part of my career. I was modeling different derivatives, different securities, modeling portfolio combinations. So much so that I also teach finance at the college. So I teach everything that I do. That's the path. Many physicists, mathematicians, and engineers ended up on the street because banks value that ability to model stuff, which is not taught in business schools. Hence, once you have that, and then you learn the financials on top of it, then you actually can create some very interesting things. And so these portfolios I create are all rooted in financial theory and are created basically with that combination of fundamental and quantitative knowledge. So that's how they provide the benefits to my clients.
And you worked at places like Bloomberg and Morgan Stanley, if I'm not wrong.
Mhm.
What would you say were some of the biggest lessons that you've taken from your time, and how you've, in your current situation, and you've started Honeybadger
Yeah.
with a bit of a character of a Honeybadger in it as well. But let's say, what main lessons did you bring from institutions like Bloomberg and Morgan Stanley?
Well, these institutions are very well, they are very well-oiled machines,
Hmm.
and they have the abilities to do a lot of stuff. There is no question about it. Um, Bloomberg is of course different. Bloomberg is a data analyzer, data provider. So some of my early quantitative training was there on the job. I learned those things. But Morgan Stanley or Bank Leumi or other places, like HSBC, Brown Brothers, you can learn how financial theory can be applied in practice. And it's also very important to understand, especially now that I'm also in academic circles, you can see the difference between academia and things that, 30 people on a planet are interested in. So there's academic corner solutions, things that are interesting in academia versus stuff that can be implemented. Because it's famously, oh yeah, well, that's a great idea you have. It's going to what improve my portfolio 0.5%, and it's going to cost me what? 1.5 million a year? Okay, well, that's too bad. We're not doing that. so
Hmm.
so so that's the kind of approach you learn in the business, that there are things that may be interesting as a theoretical analysis, but practicality is far more different and far more important. So what is actually cost beneficial to somebody to implement? And big companies are very good at that.
Okay. I'll move on to a little bit about your philosophy around money, investing, and
Mhm.
behavior of people around it as well. In your experience, what would you say are the biggest mistakes people make with their money?
Being overconfident and following the internet gurus.
Hmm.
Uh, Unfortunately, money attracts also all kinds of characters in there.
Yeah.
Some are far less, let's just say, altruistic than the others. And so the worst thing you can do is panic. Many times I see people, okay, we gotta sell everything. Everything is going off the cliff. And then, and this is exactly a good example. A month ago, the war with Iran started. The volatility was going through the roof. Um, People were selling. Market was down. I haven't compiled the results for March because just the first day yet, but I'll probably know by tomorrow. But I've seen the last 2 days there's a massive rally going on. So if you did sell, then you're likely going to miss the last 2 days. Last 2 days. And if that's the case, you're likely going to miss a lot of your return. I don't mean you should not sell if things are if things change, but panic selling is number one thing that hurts people. Over trading, panic selling, and thinking that we know more than we actually do. So that's the kind of those are the kind of things that ruin the best of plans.
And I mean, why do you think so many people, and I want to touch a little bit about your view on cryptocurrency as
Hmm.
well, given that it's been around now for almost a decade. Why do you think so many people chase get rich quick investments instead of focusing on long-term wealth? And I feel like your philosophy is more on the latter part. And what advice would you give, or what's your philosophy around that?
Slow and steady wins the race. That's what it is.
Hmm.
Intelligent investing always beats up get rich quick.
Yeah.
And the appeal of crypto is the massive upside that some people have experienced. But the
Hmm.
upside came with also a massive downside. Um, do I like the general idea around it? Yes, I do. The idea that you have a currency that's not tied up to a government, so as a check against irresponsible governments, which most developed countries in the world are, a great idea. Crypto ain't it though. It's not a currency because you can't buy bread with it, and also the volatility of it is negating the idea of currency. Now, some people say, well, it's an uncorrelated asset, and also and so on. Well, not exactly. So here's what I've done. In 2022, as the war in Ukraine started, I looked at the correlations between some market parts. And so what I looked at is S&P 500, DAX, the German index, because the war is in Europe, Bitcoin as representative of crypto, oil, gold, and managed futures. And my goal was to look about a month or so before, because the rumors out there, probably some people have an idea that's the mosaic theory, and then for about a month and a half after it started. I wanted to see if indeed any of these provides a crisis alpha. And what did I find? I found that crypto, the Bitcoin, as the most established one, has a correlation of about 0.52 daily on daily returns, daily correlation, 0.52 positive correlation with both S&P and with DAX. However, oil minus zero point 0.6, gold minus zero point 0.61, and the managed futures minus 0.62. So crisis alpha, it ain't. I'm just now waiting for a little bit of information to collect. Maybe by the end of April, I'm going to do the same thing
Yeah.
around the Iran war. I just want to see, so basically from the beginning of the year through say end of April, to see if something has changed over the last what is it 4 years, and to see if anything is different. I highly suspect it's not, but those are my returns. So this is the issue. What exactly do you get with crypto?
I
You
mean,
get something
yeah.
like it's a speculative commodity. It's not a
Hmm.
currency. It's
Hmm.
not backed by anything tangible,
Yeah.
and it's not a crisis alpha. So
Hmm. Yeah.
what exactly would you do with it? I mean, if
People
you want
are
to
trying to
play
keep
like a
yeah.
lottery, sure, I would not recommend it. I think there are better ways to make money
Hmm.
and safer ways for you. I
But
had, let me just finish this
sorry,
one. I
sorry.
had
Yeah.
a prospect
Hmm.
who basically, had some diminished IRA account because of some personal issues, and all he wanted was to talk about crypto, and said, "Look, I can't help you here. It is against my advice. You're gonna do this. You want to put all the things you have, all your money into crypto. I cannot basically sanction that because you're gonna ruin your retirement." So he didn't become a client, which is fine. I cannot just work with anybody who does anything, right?
Understood. But with, a lot of governments going around regulating crypto and trying to adopt that, you see a lot of times large corporations are also moving into it. A lot of countries also declared and then took it back as well that they want to make it official currency. But how would you say, at what point would you be comfortable with crypto as a currency?
Um, the thing is, the point where that happens
Mhm.
would be the point where the actually undoes itself. It cannot be secretive. It cannot be like this. I also definitely do not want the CBDC, central government, central bank digital currency. I think that we cannot ever allow that to happen. So I don't know how that's going to play out. Whether that's some sort of stable coin or something like that, maybe. So far, I don't see it. But I'm open to seeing. The most important thing is to in this business is to look at the data, look at the situation, and adjust your positioning based on the available information. For now, I'm not convinced that I'm seeing anything worth pursuing there.
One of my recent episodes, I was talking to this gentleman from Canada who really made me realize the fact that not a lot of people starting off their career or their financial journey have a lot, basic sense of financial literacy. And there's a whole, need for financial well-being in terms of education
Mhm.
as well. If someone is just starting that journey in their 20s or 30s, what should they focus on first?
Well, going into finance,
Starting with their career, starting with their financial journey,
yeah,
thinking
that
about the long
you're
term.
right. It is a very unfortunate that we spend a lot of time on nonsense in schools,
Hmm.
but they're not teaching financial literacy. So I would say if you're not in the field, look to find some independent advisor, somebody who can help you out, somebody who is willing to go the long mile with you to try to educate you what's going on. I am perfectly happy of educating, explaining to my clients exactly what we are doing and why. Am I right all the time? I'm not. Am I right vast majority of the time? Yes, I am. Because that's what the experience builds. But there is a reasoning behind what I'm trying to do, and I explain it to them so that eventually they can learn why things are being done. It doesn't destroy my job, because if you have life and a career and a family, you can do this. But which one of this is going to give up? Are you going to give up on your life's pursuits? Are you going to do it instead of your work, or are you going to hurt your family? Which one? Because if you want to do it right, it requires time. You need to devote serious time to understanding what's going on and how to do this. And so, because we only have 24 hours a day, the question is, can you? Maybe. As a friend of mine who is a client also said, I can't do this from the OR, operating room. I said, yeah, that's exactly what it is. Even though that he's very well educated and understands, has not just regular education but also financial literacy, there's times, he can trade stocks from the OR. That's as simple as that.
Understood. Um, I'll move on to your, life as an entrepreneur and your journey
Hmm.
with, how your days are and what lessons you're learning from your experience now, at Honeybadger. What skills do you think are most important for someone who wants to build their own business? Like yourself, who moved
Sales.
out of a corporate job and, got into, you had your own motivation, but how would you talk about skills or something to look out for?
I learned the hard way that the
Hmm.
most important skill is sales and marketing.
Hmm.
In my corporate roles, I used to deride those departments, right? That's what we always do. Anybody who's an analyst, portfolio manager is like, yeah, a monkey with a phone. But the
Hmm.
truth is, you can have the best idea in the world. If you don't have sales, you have nothing. I learned that, and I am not a great marketer. So what I do is I outsource that. It's very expensive, but I outsource and try to learn how to control them and push them in the right direction. That's my approach, because you need to focus on what you're good at. I'm not good at that. I'm good at managing money. I'm good at explaining to people what it is that we are doing, uh, but I'm not good at you know schmoozing, golf, country clubs, small talk. All that stuff is not. It's not. I mean, that's because I'm a numbers guy. I come from a hard science. I don't talk too much. I'm up to the point. So that's the important thing. The business plan, written business plan, is extremely important, and knowing how to position yourself and sell what you're doing is paramount. Without that, there is no business. If you can't reach people who can use your help, there is no business.
You mentioned at the start that you share the same values as your clients,
Mhm.
and I also can't help but keep on thinking about Honeybadger as the character that it is, but it does often rub the wrong side of your clients or your prospects as well in terms of how direct you might come across with your opinion, or it could be completely opposite that. So how do you
That's
align your?
intentional. That's very intentional.
Mhm,
I learned from one of the marketing coaches. This is called repellent marketing.
mhm.
I am direct because it fits me well, but I'm also very direct because I want to repel as many people as possible. I want to repel early anyone I don't want to work with. And to give you an example, is if you're going to come here and basically tell me, well, you can't invest in oil because I have my dreams about stuff. I said, BlackRock's down the street, they can fleece you. I'm not going to do that because that kind of statement prevents me from exercising my fiduciary duty. I am bound, duty bound, to do the best for you. If you're going to tell me that, you don't want this, you don't want that, well, I'm sorry, that's not how it works. Oil and energy powers this world, and I don't live in a dream world. So I'm not going to help you destroy your own future. There's the same idea as with the crypto prospect who wanted to do something that I don't believe it's in their best interest.
I want to ask, we touched upon a little bit about crypto and, you know, your like marketing side of things, repellent marketing. So how in this day and age of AI do you think the financial services industry, basically Wall Street, is going to be transformed, and how quickly do you see that happening?
Well, and now this comes from somebody who has programmed classification algorithms in the 80s, so I'm not like completely new to this stuff.
Okay.
Um, I think there's a lot of hype in there and a lot of things that people think it can do, but it really can't. Yesterday on LinkedIn, Michael Kitces, one of the big evangelists in wealth management business, has posted something which is a series of tests of ChatGPT. And the tests are, well, I'm thinking that the large caps are not going to do well. And the thing said, oh yeah, yeah, you should sell. But I'm thinking that the oil is going to be good. Yes, yes, you should buy. So the idea that a ChatGPT or something like that is going to give you a good financial advice is a pipe dream. And it's giving you, it's for some reason it reinforces your own biases, which is the worst thing that can happen. Plus, there is of course this tendency, especially happen in legal field, that it invents cases. So that would be a serious issue. So my philosophy is simple. I use Perplexity, I use Grok to speed up my research. Also helps me out with some coding. I do code. There are some books here that they're like on the bottom here that talk about coding. So I used to, like at Bloomberg, I was coding a lot, and when I was in the earlier career, I used to code. Now I don't do that so much. I would open a book and have my syntax there. I don't need that anymore. I can ask AI to provide me the code that will do this. Then I can test it and implement it. So it speeds up my work that way. What I will not do, I will never ever allow it to answer my clients. When you call, this is where it gets. The idea is very simple. All the big boys are now implementing these things, and their budget for compared to me is infinite. But the idea is people want to talk to people. People don't want to talk to robots, especially when things happen like they start happening in the beginning of the war breaks out. Nobody expected that. Now what? People panic. You want to talk to a robot? My personal philosophy there is very simple. When I call my bank, obviously I get shunted into AI. My answer is I want to speak to a human. Then it says, well, let me gather some information and I want to speak to a human. But I will be easier to go and I want to speak to a human.
Mhm.
After usually 5 repeats, I don't give me any information. Okay, I'll transfer it to representative. And then I talk to a person. So I think that is a disadvantage to this to the banks, which is great. I'll take all their clients that way, which is perfect because I will provide personal service. I
Yeah.
will talk to you. I will look into your personal things. I'll use AI to help me out with doing the research and providing some checks on what has been done. But AI cannot replace human intelligence, at least not yet. I'm doubtful it ever will, but because it looks backwards and summarizing things that we know, plus tries to predict the kind of answer we're looking at using some regression analysis. So that's basically how it works. I mean, 3 days ago, I got a call, and you know, it was a human voice, right? It was a normal voice. But I started sensing, I was answering, I started sensing the hesitation, the pause. And I said, is this AI? And the voice said, yes, this is an AI bot. I said, do not ever call me again. You want to call me with a human. I am not going to speak to a robot. And hung up. So I am very unlikely to do business with a company that does that. So I will not allow that to be my front either. If I call, I call. If I'm on a video call like this, it's going to be me. It's not going to be a chatbot or a agentic AI. Not going to happen. I think a competitive advantage which I can implement at relative scale, which I don't think a bank can because of sheer number of clients they have.
But if I were to ask you, with your own business, if there's any problem or any, repetition or manual task that you would like for it to be solved, what would that be? And would you ever consider AI to come in, not for customer facing or an agentic uh,
Yeah,
capability, but maybe
if if
workflows being automated?
huh, that's a good question. I mean, I'm sure that there is some things about reporting and maybe computing the numbers
Hmm.
that an AI could do. That's probably something that I'm sure that some of these firms that are providing these services now are thinking about that. So that's the kind of task. I would, of course, test it thoroughly to make sure that it's not hallucinating or doing some crazy stuff. But that's the kind of anything that I can look over after and ensure that has my stamp on it. That's what I could outsource. Anything that's client facing, I'm not going to do that.
Oh, you make an interesting point. I do believe that is where a lot of the businesses are moving towards, but then there's a downside, and with the Gen Tech capabilities, there's not 100% guarantee that you're gonna get the right, security first and foremost, and the right outcomes as well.
I'm not sure if there are tasks that may be automated, right? Like
Hmm.
the like airplane approach to the airport. A lot of that stuff can be done
Hmm.
like that, or maybe even a spaceship approaching the space station. I'm sure that
Hmm.
can be done and can be done more precisely because it requires some very big coordination and compiling of data. But anything that's relationship based, that's based on trust, I don't think that's going to be replaced by AI. At least I'm sure that the big banks and the big companies are going to push for it. But we had Wealthfront, we had a robo advisors about 10, 15 years ago, and they kind of grabbed the market share and they stayed there. So I'm thinking this is pretty much going to be the like that. There may be some jobs that get more automated, but I think it is going to create new kinds of work.
Well, we are seeing a lot of layoffs now,
Yes.
from the white collar
Yeah.
industries, and starting off from the larger organizations, and a lot to do with how fast AI is replacing those tasks that usually, junior associates or graduates would be performing.
You
But
know, we also had we had the cotton gin and the loom
mhm,
a couple of 100 years ago that replaced a lot of manual labor as
yeah,
well. But it's not that we stopped working. It
mhm,
just required different set of skills.
yeah,
So yes, you'll need to be up to date with skills. You need to be able to use it.
mhm,
If you're using it, you'll get much bigger productivity, which is where your value comes in. You have bigger productivity, you can expect bigger payments.
perfect. Guess we gone beyond our time that we scheduled,
Okay?
but it's been such an interesting conversation, was there? This
Time
was
flies in a good company.
definitely did. I really enjoyed this. Thank you again for taking the time to share your story, your insights, and your perspective on money and investing, and telling us more about Honey, Honey Badger. I'll definitely, you'll get a new follow from myself, and I hope you get more engagement
Thank
from
you.
our audience as well. But thank you so much once again. It has been a pleasure talking to you.
Thank you very much for having me.
Thank you.